Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look on the second weekly report on the gold market. Well, gold market right now is a very important market in general, and it really stands in the center of all geopolitical and financial events in the world. And we see a really big perspective for the gold market in the nearest few years probably. In today's report, we provide, as usual, the fundamental background. Actually, it hasn't changed too much, so mostly it stands the same. It's relatively positive because recent statement from the Fed, European Central Bank, shows that no rate increase stands on the table. There is still some questions about rate decrease, whether it will happen or not, but definitely no rate change to the upside. Should happen in the nearest time. Second important moment is that recent data from the China economy shows that the second largest economy of the world shows the signs of the chilling. And it could happen that actually last period last quarter shows the 6.4% increase. This is the lowest level for a very long time, for the decades. And in the nearest time, it could slow down even more. So the China growth could be somewhere around 5%, maybe slightly higher. So that will be definitely the signal of the slowdown of the global economy. In the European Union, is also everything stands far from the perfect situation. So once in autumn they told about 1.8% of growth, now they're telling just about the 0.6%. So the forecast has been dropped for the 3 times in just less than within a year. Of course, this everything supports the gold because although some inflation stands as in the United States, mostly maybe not as great as everybody would like to see it in the data, below the 2%, but still they're not dynamic. But at the same time, the rate increase stands off the table, and that's the healthy background for the gold market. Taking in consideration a lot of different global political unrest that we see here and there in a lot of countries, and global changing in the political situation of the world, that is just very good situation for gold, and we see that the demand for a gold market should increase, for the gold should increase. So speaking on the shorter term perspective, yesterday we already, not yesterday, on Friday, we already have given a hint on our concern. So actually the downward action that we see here on the daily chart, it's nothing more but just retracement on the longer term bull trend. And currently we're mostly focusing on the moment and the question whether this retracement already is over or it's still some chance exists on a possible another leg down. Because market, what the problem? The problem is that market shows the bullish reversal patterns, but the major OP target on the weekly chart that stands on 1260 has not been hit. And reversal to the upside and leaving untouched the major target, this is every time the tricky moment that makes really tricky taking the long position with keeping untouched the major target on the back, and increase the risk that market at any moment could turn down again and hit the target. So, and we need to understand how to deal with this setup. And on a daily chart, guys, we have the short-term bullish context because market has formed multiple bullish patterns, but at the same time, daily chart shows clearly the level that we should keep an eye on. And that will be invalidation point for the short-term bullish context, and this level also could answer on the question what to wait for. And this level is the 1266. So this is previous lows. With these two lows, guys, on the weekly chart, market actually has formed a kind of the tweezer's bottom because these lows mostly equal to each other. It's a very small difference. So I call this the tweezers here. Second, this upper rejection starts from the major, some minor OP. So we have the major OP that's starting from this point A, B, C top, and it targets on 1260. But also we have here is minor OP. From this A, B, C top patterns, OP has been hit, and here is it was retested. As a result, the tweezers have been formed. So this is potentially bullish combination. Also here we have the minor fib level. It doesn't have really great value because take a look what the reaction point it stands on. So it's not really very significant. But still, this is 618 support. But this is only half the story. Second half, guys, take a look that within the 2 sessions on Thursday and on Friday, market has formed 2 bullish grabbers. And both grabbers suggest the taking out of this top. It means that market should climb above this historical trend line that shows itself very good in the previous time. So it was support, now it will be resistance. But grabbers suggest that market should move above it and break this level up. It opened relatively free space here in this consolidation. So that's very important moment, and we should keep an eye on what will happen with this. Finally, if you will plot here the MACD indicator, you will see a minor bullish divergence with these lows. All in all, this gathering of the different bullish patterns, maybe each of them are not really very strong and significant, but together they create the short-term bullish background. And in the current circumstances, it's not very comfortable to go short with all this stuff on your back, and when you do not know really what will happen. So you need to wait for canceling of these patterns, or raising these patterns, and that could happen only if market will drop below the 1266 area. So that's why this level is very important for us. Once market will drop below it, it will tell us that it's not time yet to go long on the weekly daily chart, and we need to wait for reaching of the 1255, 1260. Meantime, while market stands above this area, we could maybe trade some, make some bullish trade on the gold market on the intraday charts. So on the 4-hour time frame, here we could get potentially, I'm not sure, but there are some signs that point on this possibility, this double bottom pattern. So first of all, bottoms are equal. Second, on the second bottom, we see minor wash and rinse. So this is very typical for the double bottom pattern. Finally, the rally, although it was triggered by the data release, but still rally on the second bottom looks very nice. And currently, this is possible. On the way up, the classical target of the double bottom stands approximately around monthly pivot resistance once will be 1308 area approximately. So by classical technical analysis, the target of the double bottom equals to its height or width, so from the bottoms to the neckline. It's counted in the direction of the pattern. But on the way up, market will have the 2 strong areas that it will have to pass through. So first is around the neckline, so you can see this is the fib level and 2 different resistance. So this is monthly pivot point and weekly pivot resistance 1. If market will break it, weekly pivot resistance 1 also will work as an indicator and will tell us that the new bull trend is starting on the daily chart, because market will move above the pivot resistance 1. Once market stands with the bear trend, pivot resistance 1 should hold the retracement. So that's also be important area. Second challenge, it will be confluence on 1297, 1302, and this confluence includes the major 30% resistance. That will be really tough task for gold market to break it up. So if it's just a retracement, I am not excluding chance that market will stuck there in this area and will not totally complete the double bottom pattern, but we will see. So as we have a lot of different resistance levels, it would be perfect if you would try to take the long position, if you of course would like to trade it on the long side, in advance of market reaching of this area. So we need to be prepared when the market will hit the major resistance. And our preparation should be with the ability to move stops to the break-even and come to the major resistance with the riskless trade with the break-even stop order. It means that on the hourly chart, we need to keep an eye on a possible minor retracement. Here currently it's difficult to say what really depth of the retracement will be. I'm not excluding the chances will be just a minor retracement to the 1276, 1277 area. It's also weekly pivot point. because on the 4-hour time frame chart, guys, actually market stands at no significant resistance. It's relatively not at the very bottom. This is the first action up, and market is still coming to the potential neckline. That's why there's no reasons for a deep drop here. Besides, the difference between two levels are not really significant. It's approximately $5 per contract, and it means that you could split your position and try and take position partially here if market will drop lower. It's here, adding here another part of the position. The overall setup will be valid until market stands above these lows. So if market somehow starts dropping back, approaching to the lows, this definitely will not correspond to the idea of the double bottom, and in general will not correspond to the idea of the new bullish upward action. So here should be reasonable retracement, maybe even small retracement, and market should proceed high if everything will go as we plan. So in this case, if market will come to the 1288, we will be able to move stops to the break-even, just see what will happen here. So that's what we will be watching for on the gold market in the next week.